All right, welcome everyone. Great to see you here on a Monday, middle of August. I'm live here at Portage and Main in sunny Winnipeg, Manitoba, just at the confluence of the Red River and the Assiniboine River. Great to be here today. What are we? Monday, August 17th, 2020. I'm excited today. We got a great guest on the show. Him and I have been chatting a lot over the past while about technology stocks. He's our analyst here at Canaccord Genuity on the technology side. Really thrilled to have him in here. Maybe before I go, yeah, you know what? Let's bring him in right away. Let's bring in Rob Young right away. Rob, there you are. Welcome to the Tatro Show. Great to have you here today.
Great to be here. Thanks for having me.
All right. So as I was mentioning, Robert Young, I'll call him Rob, Managing Director, Equity Research Technology for Canaccord Genuity Corp. I'm Rob Tatro from robtatro.com, Portfolio Manager at Canaccord Genuity Wealth Management and at the Tatro Wealth Advisory Group. If you're watching on YouTube, please take a second to subscribe to our channel. It's the red button, press it. If you're watching on YouTube, give us a like and a follow and share it with your friends and family. If you're sitting there and you got questions on technology stocks, today we're covering technology stocks, kind of market disruptors, innovative ideas in the future of the market and technology space specifically. Give us a question, put it right on there, put it on YouTube, put it on Facebook. We will see it and I'll ask it to Rob right here live on the show. All right, so Rob, it's been an interesting couple months. We always, as you know, we always kind of start by taking a look at the headlines. Headlines today, there's been a few. The S&P 500, bit of has been testing. The S&P 500 has been testing that high of 33,000, whatever it is. Cannot seem to close above it today. Another test today, didn't quite get there. We've had a crazy good run in the markets here the last couple months, eh?
In tech especially, it's been exciting.
Yeah, and we saw today our friend, the Oracle of Omaha, Warren Buffett. The announcement came that he'd bought into a portion of Berkshire Hathaway bought Barrick Gold. Barrick Gold was up, I think, about 10% today. That's a name that we actually added to the portfolio a while back. So some of our clients, or I should say most of our clients, will own that. So it's good for us to see that pump up. That's rare for the Oracle of Omaha to be buying gold. That's a bit of a contrarian move for him. Some other names and some other stories that came out. Obviously, the Trump and China thing. It started off with the TikTok ban. And we're going to talk maybe about VPN and what that might mean later. And now today he's talking about Huawei and what he might try to do to limit their exposure to the U.S. Do you have thoughts on that, either the TikTok story or the Huawei story?
Yeah, well, I mean, Huawei, it's an interesting situation. Huawei has been beating the Western network vendors, the wireless vendors, for a very long time. They've been able to underprice them. And so the U.S. is starting to, fight back on the premise that 5G and the next generation of wireless is strategic. The U.S. has largely ceded that to Nordic vendors like Ericsson and Nokia and Huawei. But the underlying technology, Qualcomm, that they build the semiconductor chips that power 5G. They license their technology to companies all over the world that use the modern wireless technologies that both 4G, LTE, and 5G are based on. And then, of course, you've got a number of other pieces inside of the U.S. economy that are needed for that ecosystem. Google is the other one. Their operating system for Android, which Huawei uses for their mobile phones. The U.S. is now making it harder and harder for Huawei specifically, but Chinese companies in general to use that technology. And it's very hard for Huawei to do that. If you think of what a phone is, it's a screen, it's a compute chip, and it's software. And it's pretty hard to make phones if you don't have the compute chip, because you're getting the wireless encoding and modem from from Qualcomm, and the software from Google. If you can't get those pieces, it's incredibly difficult to recreate it. China's been, in their multi-year plans. The semiconductor ecosystem is definitely something they want to get stronger in. And so it should be a really interesting geopolitical war over the next a couple of years. And then the other piece, the do you and who you, I think you said that Tencent is, trying to get them to combine. I mean, that's likely, pieces around all of the excitement inside of, esports and people watching Twitch, watching other people watch video games and that sort of a thing. Tencent is, investor in Epic, which owns Fortnite. Fortnite is the thing that all of our kids have been spending all of their time on, playing it, but also it's becoming a social network, right? And then in the same way that TikTok is. And so anyway, that's just...
We're going to chat e-gaming, because I definitely want your perception on perspective on e-gaming. E-gaming is so interesting right now. One of the best performing ETFs is Hero, which is the one of the Canadian e-gaming ETFs. In Canada, just as we run through the headlines here, sadly, if you're a CFL fan, although I don't think there are many CFL fans in Toronto, I don't want to offend you or anyone who may be a CFL fan in Toronto, but I know that this is big news in Winnipeg, because we were looked at to be a bubble city, so they're canceling the 2020 season. And that is now the first time since 1919 that there will be no Grey Cup. And we know why they didn't have a Grey Cup or a Stanley Cup in 1919, the Spanish influenza. So 100 years later, the exact same story, no Grey Cup. We are managing to get a hockey season underway. Have you been following that? I mean, your team's out, my team's out.
Once the Leafs got knocked out, I lost interest. But
yeah, but to be fair, and I respect Leafs fan, but you were kind of expecting that to come at some point, pretty quick, right?
That one line, the $35 million line, I thought that was supposed to be able to win it on its own.
Yeah, I think you guys need to get some defensemen on your team. Yeah. Cirque du Soleil announced today that the lenders are leading the bidding firm. So that's the bankruptcy proceeding. So that is ongoing there. And then the other big headline that I saw was the CRA hack. They had an online hack, a CRA. And another headline on BNN is the immigration to Canada is down 64%. This is threatening economic growth. Most of the economic growth in Canada on the population side has been via immigration the last 15 or 20 years. Any thoughts on that? Immigration down 64%. This is a BNN headline.
Well, certainly that's pretty good for Toronto housing, I would expect. I imagine that's just related to COVID-19, border restrictions, and hopefully that'll bounce back. I still think Canada would be an attractive place for most people to immigrate to. I
would think so too. Let's take a look at some of the topics we want to run through today. Anything else on the headlines that caught your eye today that I missed on the headlines?
No, I think you got it.
Yeah, I think the Dow Jones closed at 27,844, the S&P 500 3381, Nasdaq over 11,000 today, up 1%, closed at 11,129, a full gain of 110 points, 11,000. Like just the other day we were at, feels like just the other day we crossed 10, just the other day we crossed 9. It is on fire, which is what you work in, which makes a great segue. So you wrote a piece just the other day on Friday. It was a neat piece. It was called Tech. Is this real life or is this just fantasy? What are your overall thoughts on tech as we kind of enter August here, mid-August?
Yeah, so first thing I would say is that it's a sector that is, not just doing well through COVID-19, it's thriving. Most of the tools that we're leaning on right now so that we can maintain our jobs and our lifestyle are being enabled by technology. And so a lot of the winners inside of Canadian tech, particularly software names, particularly cloud-based software, they're actually doing very well. Those that are attached to e-commerce are doing exceptionally well. There's estimates that say that e-commerce was 16% of overall retail in the U.S. And that may have gone, in 1 year may have jumped, significantly north of 20%. And so a lot of the growth that we would have expected over the next several years is pulled in to this year. And that's why people are excited about that. There's all of the companies that are attached to work from home trends, whether, you are a company that needs to train your employees or you need to have them collaborate. There's all those technology platforms which are enabling employees to work from home are doing particularly well. The hardware that's associated with that, those are doing well. Mice and keyboards and green screens and webcams and all of the things that people are buying for their home desk, right? To get their home office running, all of those are doing well. And so, there's that thematic. the second piece I would say is that, technology is becoming a defensive, almost like a utility. And I know a lot of people in the investing world don't think of it like that. But if you think in my household, in the young household, the internet, I think is, it's more important, I think, than water sometimes. And my iPhone is never more than about 10 feet away from me. I mean, I'm terrible to say, but I pretty much sleep with the thing. I mean, and these things are more important to my lifestyle and my work than a lot of what people would say are the defensives of, the previous defensives and utility stocks before. And so the level of risk inherent in these technology companies, I think, is lower. Another factor to think about is ETF flows. I mean, you touched on it. The S&P 500 is at a high level. If you're going to invest in an ETF tracking fund that tracks the S&P 500, you're going to be investing, if you put $1 into that, a fair chunk of that, over 20 cents, is going to go into the FANGs, which are all tech stocks. Whether you agree that they're tech or if that's a basket of companies that are, maybe it's consumer discretionary, streaming companies, Amazon is retail, but it's enabled by technology, and that lifts the valuations across the sector. It makes them more attractive. And so there's a number of factors. The last thing I'll say is just valuations, because money, with all of the quantitative easing and the easy access to debt that we have now. I mean, you mentioned Buffett earlier. One thing he said in an interview I saw is that when the U.S. Treasury is below 1%, that's like a price earnings multiple of 100. And so if you're only going to make 1% on a government bond, what are you willing to pay for a technology company that's growing 30%, has a great balance sheet, and is almost certain to be around 2 years from now when all of this pandemic subsides? And so the valuations in tech have they've risen. And I think there's a really good argument that those valuations are well-deserved in relative terms to some of the other, parts of the economy.
You talked pandemic in 2 years. Is that kind of it just caught my attention. Is that kind of your timeline for the pandemic?
The one thing I've learned over years covering technology, maybe covering technology gives you a good sense of this. We always underestimate the impact, and we always expect the timelines to be shorter. So whenever there's something, a cultural factor, we assume that it's going to happen very quickly. It usually takes longer than we expect, and then the impact is bigger. And I think that's the case with COVID. I think the impact will eventually, 10 years when we're looking back, I think it will be bigger than we thought, and it will have lasted longer than we thought.
It's kind of like a golf round on a Sunday afternoon.
That's a good analogy.
Tell your wife you'll be back in 4 hours, but you're never back in 4 hours. There's delay. There's the course was packed. Yada yada yada. It's 5-6 hours before you're home.
And I took all this medication.
What's that?
And I took all this liquid medication.
Well, I didn't, for sure. I didn't. Very interesting stuff. This pandemic and what's happened with tech. You cover a whole bunch of companies, and maybe before I get into the companies you cover, do you mind maybe filling me in on kind of what your role is here at Canaccord? My guests will know that I've been bringing on analysts kind of regularly on the show here. Last week we had Derek DeLay, and obviously Derek quite well. We've had Scott Chan on the show as well, the financial analyst. Maybe what you do, what the role is between us, and you and I work together, and maybe just kind of let our viewers know what you cover, what you spend your day doing, and why that matters.
Sure. So I'm an old. I worked in technology companies for a number of years. I started my career in Nortel. I worked at IBM. So I am an engineer who finds himself in the capital markets, and what I do is I advise on investments in the technology square. My area of coverage is Canadian technology names, and so generally that means a Canadian company. Sometimes they're traded in the US and Canada, but for the most part traded in Canada. And I provide analysis on the outlook and the future from an investment point of view. So, there's a good company and then there's good investment, and I'm looking for both. And so the way that I integrate with our investment advisors is when they are looking for a deeper level of analysis on an issue that may have an impact on your clients, I'm a person that you can talk to get a better understanding. And then just in general, we talk all the time about what are the key issues to be aware of, related to companies that you might have in your clients' portfolios. So I'm a sector specific person. Technology is an interesting one because it spans a lot of area, particularly in Canada, because the tech sector relative to the US is small here, and it spans a lot of companies. In the US, you might have 5 or 6 sectors inside of technology, and I'm responsible for all of it, which means I have to be a pretty broad generalist. And so then that gives, because Canaccord has US research, Australian research, UK research, there's a deeper level that even I might turn to for a deeper understanding on a specific piece. I might talk to our wireless analyst in the US or our enterprise software analyst in the US to get a better understanding, which then helps me help you.
Thank you. That's great. And I'm happy, I'm thrilled to be here at Canaccord and be able to have access to guys like you. Phone call away. I did not have that ever in my career, so that's really, really neat to have it. You also put out a note. I'm just going to pull up, talk briefly here. I want to talk briefly about some of the technology themes. I don't know if you're able to see that, but let me just zoom in a little bit here. Are you able to see that?
Yeah.
Some of the technology themes that are that we're kind of seeing right now, and some stocks that are related to that. So you talked about remote work. Now, these are not recommendations, folks at home. You're just kind of outlining what some of the names are for the different themes. Do any of these kind of stick out at you? And do any of these themes you think will be more disruptive than others in the future?
Yeah, so this is a piece that we wrote around COVID back in the March through May timeframe, when if I look back to that time, at the beginning of the onset of COVID, people were very aggressively looking for investments that had strong balance sheet, strong percentage of cash relative to the valuation, companies that could survive without revenue. And quickly after that subsided, and people started to look for names that had the potential to benefit from the pandemic, that would thrive through the pandemic. And so we put a list of the various themes that we saw. And so in the left column here is the different themes that we saw having an impact, or that might benefit from all of the things happening with COVID, the things I already talked about, like working from home, online learning, things like that. And then, we just highlighted a number of stocks that were attached to those trends. And so, the biggest ones that I would say would be the large caps around collaboration, Microsoft, Zoom. Those are well understood, and just a list of the different themes. I think we're going to talk a little bit about video game and esports. That's another one that's a little farther down the list there.
Yeah, let's maybe transition to that. A reminder, folks, I'm here with Rob Young, our analyst here on the technology side at Canaccord Genuity Wealth Management. I'm Rob Tatro from robtatro.com. Thanks for tuning in today, guys. Let's chat a bit about video gaming and what that's done. So you asked me 5 years ago if I had ever thought that I would watch any type of video gaming online as an adult male, and I would have told you you're crazy. That's impossible. That's never going to happen. Lo and behold, during the pandemic, I was so starving for sports that I caught myself watching an esports basketball tournament that was being shown on TSN, and I loved it. I watched it and I loved it, and then I watched some other e-games, mostly esports games for me. But I know for sure my kids watch Twitch, and I think I do have. I'm gonna pull that up here, but maybe I'll kind of lead that into how big is that industry? How much has it grown, and what are we seeing there in kind of a potential future growth for that?
Yeah, well, the video game industry in general is enormous. Estimates are around $150 billion annual industry. To put context around it, I know a lot of people have a good sense of how large it is. It's bigger than both the music industry and the film industry now. It is a massive entertainment industry, and it's competing for your time. This was last year. There was a question posed to Netflix on who they thought their biggest competitor was, and the context being around HBO. And Netflix said, we see our biggest competitor is Fortnite because that's the de facto competition for your time. And younger people are spending more and more time on Fortnite, and that prevents them from logging in and using Netflix. And so there's a couple pieces out of that. I mean, video games are squeezing out, or they're pushing out other forms of entertainment, particularly over the last couple of months with COVID. We're locked in our homes, and so people are just spending a lot of time on it. And was very interesting is it's generally younger people, it's generally affluent people. And so if you are an advertiser, let's say you're Kellogg and you're trying to sell sugary cereals to young kids. When I was a kid, you'd get me on Saturday morning when I was watching Scooby-Doo, but that doesn't happen anymore. So if you're Kellogg and you want to reach that kid, the best way to do it is through some angle, or one of the best ways to do it is through some angle of video game lifestyle, which is why Esports and Twitch are doing so well, is because it's one of the places where you can advertise to a group of people that are attracted to watching, video games. Other people play video games, or other people showing how to crack games. YouTube is another one. I mean, if you look at some of the Fortnite content that's on YouTube, there's not just people playing video games and learning how to play better, but also enjoying how they play, but also there's a lot of content generation around Fortnite. And so it's created this really interesting way for advertisers to reach younger people that are really unreachable through other means.
Yeah, and it used to be that they would watch Twitch, and I pulled up the most watched games from Twitch here last 7 days. It used to be Fortnite and Call of Duty and League of Legends would dominate this, but just chatting, I don't know what that is, but I imagine that's more the social interactive. It's not someone watching someone play Fortnite, right?
Yeah. I mean, there always seems to be some odd, at least from my perspective as an older guy, some odd way that people are watching other people. There was one for a while where people were watching other people study for exams, and I don't understand why that would be interesting, but it is. But League of Legends is one of the nerdiest, I guess, of the video games. I mean, you have to have a PC running a good rig in order to do well at League of Legends. And so, I mean, that would be at the pinnacle of the video game lifestyle. And esports is an area we've done a bunch of work on. It's much smaller as a market. It's only about $1 billion a year, not $150 billion, which includes, Activision, Microsoft, Electronic Arts. But esports is just this nascent piece, which is completely focused on, watching other people play video games and the tournaments around those video games, and then the sponsorship and the advertising connected to that.
And those sponsorships now, I just saw a piece like these large breweries in Asia and stuff, and in Germany and the UK, they're now sponsoring these esports teams like they would for a regular soccer team, right?
And the one you probably think of is Vorsteiner. I'm not sure if I'm pronouncing it correctly.
Yeah.
But it's incredible the number of esports has always attracted what they call endemic brands, which are games like companies like Logitech, who sell mice and keyboards, or Nvidia, who sells the best GPU for video game rendering. But what we've seen is that we've got more traditional advertisers who are trying to get access. And, Vorsteiner is an interesting one because you wouldn't be advertising to children, right? So this is broadening out. The user base is broadening out into people like you and I, because for the last several months, I haven't been able to watch my normal sports. I haven't been able to watch hockey. And so I've been watching video games, and, it's incredible because I actually have been watching a lot of video games recently, but only because my son plays Fortnite, and I quite enjoy watching him play Fortnite. And so I am actually spending way more time watching video games than I ever would have. And so TD also, they announced that they were going to sponsor the Toronto Defiant. That's another one. The Formula One has been getting aggressive. The NBA through COVID was there are different teams that were broadcasting games of NBA 2K. And so this is just a theme that's growing and growing. The craziest one I would point to would be Louis Vuitton, who is, among the most curated and careful brands. They actually are building the case for the League of Legends trophy. And so they're getting involved in esports as well, which is, I think that tells you they're trying to get exposure to a younger, affluent customer that they can't reach other ways.
It's going to be a fancy case, I guarantee.
It is an extremely fancy case. You can look it up on the internet. It's an impressive looking piece.
You guys held your growth conference. I believe this is this the 40th growth conference? I could be mistaken, but it was held virtually, right? You guys held it virtually this year. Canaccord held it. It was a virtual edition. How did it go? And any takebacks, anything you want to share with our viewers that was really neat?
Oh, it went smashingly well. I think, if someone had said to me 6 months ago that, our business could operate as effectively as it does with everybody working from home, I would have thought that was a bit crazy, because this is largely a relationship business, the broader investment bank, certainly. And, it's gone tremendously well. The growth conference, like you said, it's the 40th one, the first virtual edition. And the number of people who attended was materially larger. The number of companies we had was materially larger. I don't know the specific numbers, but up significantly. And, because it's less of an investment to attend for our clients, instead of having to fly to go to Boston, where it's normally held in person. They were just able to log on to the internet and hear from the companies presenting, or fireside chats with analysts like myself, or doing one-on-one curated meetings with companies. And it went surprisingly well. I think there's a place in the future for virtual conferences. I hope that at some point, we're able to do these things in person, because I think there's a lot of value from being in the same room as a company when they're pitching their opportunity. But there's definitely a place for virtual in a way I would never have expected even a year ago.
Yeah, we're supposed to host, as part of my charity work, I'm supposed to host the the global, it's a health and public policy conference on congenital CMV infections, which is a cause that's dear to my heart. And we won the bid to host it in Ottawa, and it was supposed to be hosted next week in Ottawa. So we're obviously not hosting it next week in Ottawa, because this was a global conference from infectious disease specialists all over the planet. But we are doing a very large launch of a virtual conference. So we're going to do it. We're going to run it. So I imagine there's definitely a future, because I know most businesses, corporations, they kind of, I don't want to say scramble, but it's a little bit of a scramble to try to put something together as a virtual conference. So I imagine there'll be some sort of package or company that's going to pop out here, and maybe of some already that are going to just do it for you and do it effectively and manage and maintain.
There are definitely a couple, none that I'd be able to point to as an investment, but it's something that a lot of companies have had to scramble to get on top of. Not just investment banks, but anyone in a sales position. Particularly if you have a large sale that's normally, you have to go and travel and shake hands and meet all of the decision makers. That's not possible, and so the only way to do it is with a Zoom call. It's the same. With our business, the only way to hold these conferences right now and be safe and both to your clients and your employees is to do it virtually. And so it's something we have to do, but at the same time, there is value. Like it is it's an excellent format once you're comfortable with the technology. Like I didn't have a webcam on my computer at work, and now I'm pretty sure that's going to be standard equipment, right?
Yeah, it's tough to operate without Zoom these days.
Yeah.
Speaking of travel and business activity post-COVID, you're at home today, I would imagine. You're at home. What's the percentage of guys going into the office? When do you see that kind of picking up again? How many people are going to work from home kind of permanently here? What are your thoughts on all that?
Yeah, it's interesting. I think the biggest thing that keeps me away is the elevator, because where we are in downtown Toronto, we're on the 30th floor. And, if you want to run and grab a coffee, or if you want to grab lunch, or just coming in the morning, everyone, comes at the same time, and you can only go 4 people to an elevator, but normally you'd cram 20. And so the lineups to get up to your floor are going to be increasingly long. Right now, it's a pretty flexible arrangement. Most of the people that I work with, you have the option, which makes sense in our business, because I think you can be very, very productive from home. It is a relationship business, and so over time, I think we'll be back in the office. If I were to hazard a guess, I would say 10% are in the office, and it's more of a rotating group, because people are going in when they need to, when they're doing meetings. I've only been in the office about 5 or 6 times since March, whereas normally I would, with the exception of going to conferences like CES and Mobile World Congress and things like that, I would be in the office every day.
And you're benefiting from the not having to shave factor as well, the Elliot Friedman look.
Yes.
Looks good, by the way. Looks good. I do want to chat about, you and I talked about VPN and kind of what that might look like. I think it's a bit of a disruptor potentially. So you made a note in one of your comments. For those of you who don't know, maybe you could just briefly, maybe before I do that, remind our viewers, I'm here with Rob Young, technology analyst at Canaccord Genuity Wealth Management, and I'm Rob Tatro. Rob, maybe tell us what a VPN is and why people use it, and why you're kind of, this is on your radar right now.
Yeah, so a VPN's a virtual private network, but essentially what it does is it lets you create a tunnel through the internet that you send your messages through. And so it can make the internet think that you're in a place you aren't. And so people have been using this technology for years to watch Netflix here in Canada. If you want the broader set of shows, you can pretend like you're in the US using a VPN. And so what's going on right now, all of this worry around what's going to happen with TikTok certainly would be a worry in my household with my kids. They spend a bit of time on TikTok. And so the expectation is, as if the US is going to be difficult, make it difficult for TikTok to operate in the US, then you're going to see a spike in the adoption of VPNs. And, this is something that's normal around the world. I think, people in China have used this technology for years to get around the Great Firewall that prevents a lot of US companies from operating in China now, to get access to news from outside of China. And so it's just a piece of the technology ecosystem that is, it's notable because of the numbers. The adoption already has spiked recently in India and Japan, where we've seen some limitations on, what you can consume. And, and then as far as understanding what companies are attached to that thing, like right now, it would be the larger equipment vendors like Cisco, Juniper, companies like that create the technology, underlying technology, rather than one of the companies that provides a service, because it's still in a little bit of a gray area, right?
Yeah, for sure. I think, I've known it like that. You want to get the Netflix access. But you speak about TikTok, and here I thought this TikTok was just for kids. I had a dinner with some friends, partners at a law firm that are my age and older over the weekend. And one of them was checking his TikTok messages during dinner. I said, "What are you doing? Put your phone away." He's checking TikTok. So I guess it is more than just the teenagers nowadays. And that gentleman is older than me. So
I think a lot of parents have to do it to monitor what their kids are doing, right?
Oh, maybe that's what he was doing. Yeah.
That's how it impacts me. I learned a few dance moves off of TikTok from time to time, but for the most part, it's mostly monitoring my kids. But it's surprising how these new platforms can just rapidly grow into the younger, early adopting consumers, and you can grow very quickly. Before you know it, it can be a massive company, and that's just what's happened with TikTok.
You do cover a Manitoba company. What are your thoughts generally? It's in the industry of, it used to be, so Pollard Banknote, they used to make these kind of scratch tabs where you would kind of peel off and you would see if you won, 3 bells or 3 cherries or whatever it was. Yep. And then they kind of evolved over time into more of the gambling platform, I guess. I'm not sure if I'm naming that the right term.
iLottery, I guess it would be.
iLottery, okay. So what are your thoughts on that specific market, that sector, or if you can touch on Pollard in any way?
Yeah, that's another piece we could have talked of earlier when we were talking about the impacts from the pandemic. The casinos have been shut down, and
people need their fix.
Yeah, and so where do you go? And so one of the things that's been benefiting is the lotteries. Initially, at the very beginning, there was a lot of worry around what was going to happen because a lot of the places where people would go to buy their instant ticket or their draw game was closed and they couldn't go, or people were afraid to go. But it's really recovered quickly. Most of the companies in the space, Pollard, there's IGT, Scientific Games, they're all talking about strong lottery trends. Basically underscoring how resilient it is. And then there's this additional, probably temporary positive driver from, people that can't go to the casino. And if you think about the casino, I mean, a lot of the regional casinos, I'm not talking about Vegas here, I'm talking about, the regional, it's a lot of older patrons. And you can make a very good argument that those older patrons might be the more reticent to go back to their previous gaming ways at the at the casino, and so that means perhaps good for instant ticket purchases, good for the lottery, good for the vendors that support them, like Pollard, like IGT, like Side Games, and then there's this other angle around online. iLottery is an app that you might download onto your phone and play your your regular draw numbers through the lottery, or it may actually be a more gamified experience, maybe closer to something that looks like a slot machine even. And the lotteries have been reticent. They're very conservative organizations, right? Because they have a mandate to raise money for the government, but they're also they're not pure profit companies. They have to do it in a very balanced way, let's say. And so now COVID has created this incentive for the lotteries to replace some of the revenue that they thought they were going to lose at the beginning. And there's also a number of lottery organizations, like here in Ontario, OLG, they operate casinos and lottery. And so their casino revenue has been hammered. And so they're putting some of the conservatism around an online lottery has gone down. And so the market thinks that iLottery is going to be able to move forward in a faster pace. And so that benefits companies like Pollard, like IGT, like Side Games, they provide that service to the lotteries.
Yeah, it's super interesting. I mean, I went to the Raptors game last year, game 5. I was lucky enough to go to the finals. And I remember looking up at the 50-50, and I remember seeing the number was like 1.3 million or something.
Yeah.
And I remember just asking the guy I was with, like, how is that possible? There's only 20,000 people here. Like, the math just doesn't make sense. He's like, oh, no, they're doing it online, and they're getting a ton of money online. And
right.
we weren't
joining in, and that wasn't possible even a couple of years ago. Probably wasn't allowed. And now the lottery is opening up it's loosening some of the conservatism, and these iLottery businesses are starting to move.
I wonder if they'll do 50-50s for these upcoming games here in Edmonton and Toronto. I haven't seen it yet, but I know that some Winnipeggers would love to participate in that. We love our 50-50s here in Winnipeg, that's for sure. Mm-hmm. You cover a lot of stocks in some interesting sectors, robotics, crypto, even some of the technology stuff. I could ask you about all of them, but maybe is there one that's kind of really interesting that you'd like to share about, either one of the companies or the subsectors that you really think are interesting?
Yeah, I mean, what's been the most interesting the last couple of months has really been the software sector. I mean, every company that's attached to these work from home e-commerce trends have been doing tremendously well. I mean, Shopify is one example. The valuation on Shopify has been so very high. It's gotten to a point where it's almost too high. And it is so I would say software is probably the most resilient space. And, it's an area that's very profitable, especially when they're delivering their services from the cloud, and generally high growth. And so people expect that will make it to the other side of COVID, and not just make it, but thrive. And so that sector has been doing exceptionally well.
Yeah, it's the whole thing has moved just so much. And you talked about e-commerce, talked about online gambling. We talked about video gaming. Now you also cover open text and Constellation. Are those that kind of? So Constellation is kind of a more of a venture cap where they go out and the venture cap is probably the wrong word now, but what would the word be? A consolidator, if you will, of software companies.
Canadian investors seem to like the consolidation theme. So Constellation is a vertical market software consolidation engine. It's as much a private equity business as it is a software business. It's constantly buying small vertical market software companies that have, a strong market position in areas that you might not even realize is there. Like there's a company that makes, POS equipment or POS software for golf courses. And they'd be very interested in acquiring those businesses, combining them together. And they look at the maintenance stream from the business, and they look at optimizing that over time. And the business has done exceptionally well. Open Text is a little more of an integrator. It does a lot of acquisitions because its primary businesses have had low organic growth, and to supplement it, they have a very strong M&A capability where they've been buying assets and integrating them into their product. Whereas Constellation wouldn't integrate, they would operate these vertical market software businesses, almost standalone on some shared services. So they're very good businesses, both of them. And I don't cover them specifically, but they have both done reasonably well recently.
Hey, I'm going to pull up a chart here that you put in one of your. Hopefully, you're able to speak to this one. It is a technology historic valuation, historic EV divided by sales. So this is a chart that you've put together, and there's a couple different ones here. There's a Canadian one and there's a U.S. one, I believe. Do you mind touching on this briefly and why you think this makes sense or doesn't make sense?
Sure. I mean, the point I'm trying to make here is that valuations are very high. I think there's good reasons for why valuations are high. But
can you first describe what this measures exactly?
Yeah, sure. So what we do is we aggregate all of the software as a service companies as a group, and we take a group valuation. And so the blue line there is the valuation of those companies in aggregate, and you can see it's around 11 times. So 11 times revenue, and that would be on the forward year. And then the dotted line is the average. So if you were to go back over time, or at least in this chart, going back to 2013, so back through the last mini downturn, but not including the 2008 downturn, the average would be about 7 times. If you were to include that downturn, it would be down around 6 times. And so the argument
what would it have gone as high as what in maybe 2001?
Oh, it would have been extremely high. It would be
much higher than this.
Materially higher than where it is now. At the time, they would have looked at companies from the point of view of a PE multiple, and I think the average, like the S&P right now, is around 20 times. I think our strategist in the U.S., Dwyer, has a target of 20 times rather PE. If you were to look back at 2000, it would have been around 40 times. And I mean, it doesn't tell the full story. I mean, so there, even within this chart, you're going to have some companies that are at a very high multiple, very high valuation, that drag the average up. In this case, because software as a service in general has had high valuation for that sector, the sector is very high. And so at 10 or 11 times, that is, going back to 2014, the highest we've seen. Notable because it's higher than it was before the pandemic. And that's because of work from home trends and e-commerce.
But wouldn't the optimists say, obviously it's going to be the highest it's ever been because we have 40% of the people working from home, or 50 or 60, and a good chunk are going to continue to work from home?
Yeah.
Whereby the pessimists might say, yeah, but the valuations still don't, they're not generating profits yet, they're not generating earnings yet. So like pull the reins on the horse a little bit.
Yeah. There's definitely some that aren't. There's a few in there that would be generating earnings, but it's so what I will say is that the risk is higher. what we like to say to investors is that companies that aren't profitable, that are optimizing for growth, they're brittle. And so when you end up in a situation where there's a market dislocation, generally the higher valuation companies without profits, they're more heavily impacted. If you were to go back to the front end of, the COVID-19, you'll see a lot of volatility, and the higher valuation, lower profitability companies would have been more impacted by that volatility. If we end up in a situation where the economy slows down materially, then higher valuation names are likely going to be impacted more than lower valuation names. And so they're definitely a higher level of risk.
Are you able to tell us the Nortel story? Were you there when it kind of blew up?
I
never heard you tell it. Yeah.
I was there through the best times and the worst times. I was a junior software person. It was an exciting time. It was the best company to work in when optical was being laid all over the world. It was a benefactor of all of the infrastructure spend to lay the rails for all of the internet services that we have now. All of the optical pathways, all of the internet backhaul and long haul that we're using now that enabled companies like Google and Facebook and Amazon to operate. And Nortel was the darling. And valuations got ahead of themselves, and then inventory started to build, and it became clear that the business wasn't as healthy as analysts at the time thought. I wasn't an analyst. I was an engineer working at Nortel at the time, and then the world came to a sudden stop for everyone in tech, and I think it took about 10 years to get back. And now we're again in a very strong technology tape. And the question is, how far can it go? I like to, Peter Lynch, who's, famous as a famous investor, once said that more money has been lost waiting for the correction than in the correction itself. And that's the hard thing for money managers today is, when to step aside from a very strong trend. I think that right now, technology has some very strong tailwinds around all of these factors I've been talking about, and there's no reason to think that will stop anytime soon. But anyway, back to my Nortel days. I mean, it was an exciting place to work, and Nortel would probably still be here today if they had raised money at the top of the market. They didn't. And they would probably still be here today if Huawei didn't have the pricing that it did. They were able to compete very effectively with Nortel, and Huawei won. And so Nortel died, and we have 1,000 little companies that have been created from the people that learned how to code, how to build networks. All of that has turned into hundreds of companies like Shopify, like Canaxis. And so I think in general, I think we've benefited from it because it's created a stronger tech ecosystem, but it took a long time to recover.
I had Bruce Croxton on a couple of weeks ago so he's big into Round 13 and venture cap, former Dragon from Dragon's Den.
Yeah.
Check out the video if you're bored on my YouTube page. It's on there. He was fantastic because he had a very similar comment. He said, you know what? All these engineers and these tech and these software minds got developed in the late 90s, early 2000s, and they then went on to become either themselves or partner with others, and they formed the future and the genesis of what is a pretty good venture cap and mini Silicon Valley that we have here in Canada now. And it's not just out in Waterloo. He said Victoria, and Vancouver, and Winnipeg, and Halifax, and there's activity pretty much everywhere across the country now. So that's kind of a neat thing as a Canadian.
A lot of my former coworkers left Canada, unfortunately. So there was a bit of a brain drain because it had been easier to make a career in technology in the U.S. than Canada. But I think that's it's changed. I think that Toronto, I think that Montreal, Waterloo, certainly some great tech centers. And I mean, I agree with everything you said that Mr. Croxton said. I mean, the one thing that I think people don't understand is there are people that were trained at Bell Northern Research 30 years ago on how to develop software. And those people, some of them are still in the industry. And so you have these professionals who know software. They've been developing applications and products for decades, and that's a very, very difficult thing to replace. It's a difficult thing to find.
Yeah, no kidding. Hey, before I get to a question, I just want to recap the closing days for the TSX, because the TSX finished up 141 points. They closed at 16,656. Oddly enough, Dow was down 86 points, closing at 27,844. That is on the heels of one sector pretty much in Canada, two sectors moving the entire market today, and that is materials, mostly gold. Gold was up a ton today, plus the Barrick news. So materials was up 4.33%. Energy was up about 1/3%. Financials were the lead laggards, minus about 2/3%. There's one situation where you see the Canada and the U.S. markets not moving in unison. So we were up today, they were down. The S&P was up a little bit. Rob Young here, analyst at Canaccord Genuity Wealth Management. I want to ask you your last thoughts before thank you for your time today. I want to ask you your last thoughts about valuations generally. You get people on the street coming up to you every single day, I'm sure, or probably not because you're not outside a ton now. But back when you were in the office saying, hey, am I too late to the party? What do we do with tech? What do I do with tech? What do I do with tech? So if someone were to ask you today, what do you do with tech? I know it's a longer answer and we just kind of went through, 50 minutes of it. What would your general thoughts be on that?
So I would say that tech companies this last quarter and in general, they're performing very well. They have had good results. And so that suggests that the fundamentals of their businesses are very strong. And so I don't see a fundamental reason why technology companies will run into a wall here. Valuation is a separate discussion. Valuations are certainly high relative to the history of the sector. And so then the question is when does it stop? And I don't see anything that's going to stop it right now. Valuations are high because some of the low risk assets like the US 10-year treasury at 0.6%, I mean, it's very difficult to make money. And so people are moving up the risk curve. And because people are perceiving these companies as lower risk than they would have 10 years ago, because they have strong balance sheets, they've got good performing businesses, and people are familiar with the services. And so all of that drags up the average. And so in relative terms, which is one of the tools that I use every day is relative valuation. And when we look at companies that are similar, those relative valuations have crept up. I don't see any reason why that's going to stop. And these are just in general, they're very good businesses. And when we look at valuation, we're looking for companies that have a good future cash flow. And so not necessarily cash flow today, but if you have a very good, strong growth business that has a good product, that has good product market fit, and you're growing, you have good price control, then that suggests that you're going to have future cash flow. And so all of those things point to a very strong sector. And so I don't see any reason why valuations are going to fall off. You have to be careful, though. There's more risk today than there was a year ago because if there is a big market dislocation, the higher valuation names, like I said before, are more brittle than some of the, a very high cash flow, more tangible business. So,
and the big point about the other big point about the 10 years being at 0.6 is every one of these companies has debt on their balance sheet, and when they do, or most of them, pretty much all of them, that's a big expense that is significantly cheaper than it used to be, right? So you could fund growth for a lot cheaper than you ever could before, right?
Yeah, the cost of capital is just lower in general. It's interesting. We see a lot of IPOs starting to happen now, which is interesting. We'll see how that pans out. Companies are obviously looking at the strong valuations in the market today. In the long run, the public market should be the lowest cost of capital for a company because that's where you have the most people competing to give you money. And that's been not the case for the last, maybe decade even because of the low cost of debt. So it'd be interesting to see where this goes from here. Yeah,
super interesting. Okay, guys, next week on the show, I got John Courtliff. So he is the CEO of ICM. They are a private real estate investment trust. He's effectively a real estate portfolio manager managing private third-party trusts. We're gonna talk about how to invest in real estate through limited partnerships, through private trust as an alternative asset class. So not a stock, not something that trades on the TSX or on the S&P 500. It's something that's a private deal. And we're going to talk about that, how to get exposure, alternatives, why some of those largest companies and largest endowment funds in the world are adding this sleeve to their portfolio. I think the focus will be mostly on multifamily. Super interesting. Really, really pumped to have that guy on the show. Once again, I want to thank our guest for the day, Rob Young. Thank you for joining me. Our analyst, technology analyst, Canaccord Genuity Wealth Management. Thank you for joining us. I do want to thank our guests for tuning in. If you're watching on YouTube, take a second, subscribe, press the red button. If you'd like to book a no obligation consultation with me, please go to www.speaktorob.com. We will book you in and we'll have a chat. It will be by Zoom, obviously. Thank goodness for technology. And thanks so much for tuning in, guys. If you're on Facebook, please like and share. Thanks again for tuning in. August 17th, 2020. Great day again, Rob. Thank you so much.